Financial sector trade groups, including the American Bankers Association and the Securities Industry and Financial Markets Association, have called on the U.S. Treasury Department to enhance its cybersecurity measures following a significant email hack. This breach allowed hackers to intercept sensitive communications from over 100 bank regulators for more than a year, accessing approximately 150,000 emails. The breach, which exploited an administrative account lacking multi-factor authentication, has raised concerns about the cybersecurity practices of federal regulatory agencies. The trade groups are urging the Treasury to adopt stricter data protection standards and to promptly inform affected organizations of any breaches within 3 days. The implications of this cybersecurity breach are profound, as it exposed highly sensitive information that could undermine public confidence in the financial regulatory system. In response, some major banks have already started limiting the sharing of information with the Office of the Comptroller of the Currency, OCC, the bureau affected by the breach. The trade associations are advocating for a shift away from submitting sensitive data through online portals or email, suggesting instead that banks retain control over their data and allow government inspectors to review it on site. This incident underscores the necessity for federal regulators to implement robust cybersecurity measures, akin to those expected from financial institutions, to mitigate risks and protect the integrity of the financial system.
The silver market is witnessing a potential supercycle, with prices approaching the crucial $50 per ounce mark, a level not seen since 2011. Ottavio Costa, a macro strategist at Crescat Capital, highlights that silver is catching up to gold after a decade of underperformance. Since June, silver prices have surged over 10%, with the iShares Silver Trust, SLV, rising 25% year-to-date, paralleling the SPDR Gold Trust, GLD. Costa suggests that silver, traditionally viewed as an industrial commodity, is increasingly being perceived as a monetary hedge, especially as central banks boost their gold reserves. This shift, coupled with a historically high gold-to-silver ratio of 100-to-1, sets the stage for a significant market correction. The demand dynamics for silver are also shifting, with industrial applications, particularly in solar panels, driving increased consumption. Solar energy now accounts for 15% to 17% of global silver demand, a significant rise from previous years. Costa points out that there are no major new silver supplies expected in the near term, which, combined with rising industrial demand, could further tighten the market. Additionally, Chinese buyers have been paying premiums for silver concentrate, indicating strong physical demand that is starting to reflect in the futures market. As Crescat Capital positions itself strategically in the silver market, Costa underscores the potential for a breakout beyond $50, leading to uncharted price discovery territory.
Synchrony Financial's stock saw an uptick on Monday, rising by 2.94% to $60.96. Following the announcement of a strategic partnership with OnePay to introduce a new credit card program in collaboration with Walmart. This partnership designates Synchrony as the exclusive issuer of OnePay credit cards for Walmart, featuring both a general-purpose MasterCard and a private label card tailored for Walmart purchases. These cards will be integrated into the OnePay app, which broadens the financial services available to users, potentially enhancing customer loyalty and boosting sales. The initiative is anticipated to yield attractive risk-adjusted returns and contribute positively to Synchrony's long-term financial performance. The collaboration is significant for Synchrony as it aligns with its strategy to foster innovation and deliver enhanced credit experiences, thereby supporting its growth objectives. By partnering with a major retailer like Walmart, Synchrony not only strengthens its market presence, but also taps into Walmart's vast customer base, potentially increasing its credit card user base. This move is expected to drive high-quality growth for Synchrony, underscoring the company's commitment to expanding its financial services offerings and enhancing customer engagement through strategic partnerships.
IBM has announced the acquisition of Seek AI, a New York City-based artificial intelligence startup focusing on natural language data querying. This move is part of IBM's broader initiative to advance agentic AI development, highlighted by the launch of Watsonx AI Labs. The lab, located in Manhattan's Flatiron District, aims to develop next-generation AI systems that can be integrated into various enterprise applications, including cybersecurity and customer service. Seek AI's technology, which allows users to interact with complex datasets through natural language prompts, will be central to the lab's operations. The acquisition and the establishment of Watsonx AI Labs underscore IBM's commitment to leveraging New York City's burgeoning AI ecosystem. The city, home to over 2,000 AI startups and experiencing significant workforce growth, provides a fertile ground for innovation. IBM plans to collaborate with local universities and research institutions to nurture talent and expand its footprint in AI development. Through its $500 million enterprise AI venture fund, IBM will also offer mentorship, technical support, and financial backing to select startups within the lab, aiming to foster the creation of enterprise-ready AI solutions. This strategic positioning not only reinforces IBM's role in shaping AI's future, but also enhances New York's status as a global tech hub.
Australia has implemented new regulations for the buy now, pay later BNPL sector, effective immediately, which reclassify these services as credit products. This significant regulatory shift mandates BNPL providers, such as Afterpay, owned by Block and Zip, to conduct credit checks and assess the financial situations of new customers before approving them for credit. The regulations aim to address concerns from consumer advocacy groups about the risk of consumers accumulating unaffordable debts through multiple BNPL accounts. As a result, BNPL firms are now required to hold a credit license and comply with existing credit laws, aligning their operations more closely with traditional credit offerings. While the changes primarily impact new customers, existing customers seeking to increase their credit limits will also be subject to credit checks, although income verification is not required. The immediate effect on major players like Afterpay and Zip is expected to be minimal, as the market is already saturated, with most potential users having existing accounts. Industry experts, including Lance Blockley, note that the focus for BNPL firms may shift towards expanding merchant partnerships and exploring opportunities in less regulated markets, such as the U.S. The new regulations introduce a light-touch credit approval process, especially for credit limits under $2,000, marking a significant step towards integrating BNPL services into the broader financial regulatory framework. This change seeks to balance consumer protection with fostering competition and innovation within the fintech sector, as regulators and industry players navigate the evolving landscape.
Michael Sabia, CEO of Hydro-Quebec and former head of Quebec's pension fund, highlighted Canada's ambition deficit at the Intersect 2025 conference, emphasizing the need for streamlined regulations to attract foreign investment. Sabia criticized the current regulatory environment, describing it as cumbersome and a deterrent to potential investors, particularly in the energy sector. He advocated for a more efficient regulatory framework that could expedite project approvals and foster economic growth. In line with these concerns, Prime Minister Mark Carney introduced the One Canadian Economy Act, aimed at fast-tracking nation-building projects with a reduced approval timeline from 5 to 2 years, signaling a shift in governmental approach from questioning new projects to facilitating their implementation. Sabia also stressed the importance of rethinking partnerships with Indigenous communities and the financing of national projects. He noted a trust deficit with Indigenous groups, advocating for direct engagement to build trust and avoid prolonged legal disputes. On the financial front, Sabia pointed out the mismatch between the risk profiles of early-stage infrastructure projects and the investment criteria of major pension funds. He proposed the introduction of bridge capital to assume initial risks, paving the way for larger institutional investors once projects become operational. As Canada faces potential economic slowdowns, Sabia urged immediate large-scale investments to mitigate economic challenges and seize growth opportunities.
GameStop Corporation, NYSE, GME, is poised to release its first quarter earnings report, with analysts projecting sales of $754.2 million, a decrease from $881.8 million in the same period last year. Despite a history of missing sales estimates, GameStop is expected to post a profit of 4 cents per share, a notable turnaround from a loss of 12 cents per share in the previous year's first quarter. The company's recent performance has been buoyed by strategic moves such as the acquisition of 4,710 Bitcoin, signaling a diversification of its balance sheet into cryptocurrency. Investor attention is also focused on GameStop's involvement with the Nintendo Switch 2 release, which has sparked significant consumer interest and could impact future earnings. However, GameStop's reticence to provide forward guidance or host earnings calls may leave investors craving more transparency, particularly regarding the implications of its Bitcoin holdings and the impact of hardware sales on its financial health. While GameStop's stock has experienced a recent uptick, any lack of detail in the earnings report could temper investor enthusiasm. The stock closed up 2.1% at $30.22, yet remains down 2.4% year-to-date in 2025.
President Donald Trump has launched the Invest America Roundtable, introducing a new initiative known as Trump Savings Accounts, which aims to provide American children born between January 1, 2025 and December 31, 2028 with a financial head start. The program proposes a $1,000 government-funded investment account for each eligible child, with the funds invested in diversified index funds that track the U.S. stock market. This initiative is part of a broader budget proposal dubbed the Big Beautiful Bill, and seeks to promote early financial literacy and investment, potentially fostering a culture of saving and investing among future generations. The accounts, funded by the Treasury Department, allow additional post-tax contributions of up to $5,000 annually. Partial withdrawals can be made at age 18, with full access granted by age 30, intended for educational and entrepreneurial purposes. The program is expected to cost $3.6 billion, with funding proposed to come from a 3.5% remittance tax, although this has sparked debate over its fiscal implications. While Trump assures there will be no taxpayer burden, the initiative faces scrutiny from fiscal conservatives concerned about its impact on national debt. Critics of the program highlight its limited tax advantages compared to existing savings options like 529 college savings plans and Roth IRAs, suggesting these might be more beneficial for long-term savings. The success of the initiative will depend on effective implementation, public reception, and the performance of financial markets over time. If successful, it could increase future participation in financial markets and contribute to a more financially savvy population, potentially impacting consumer behavior and economic growth in the long term.
Advanced Micro Devices Inc., AMD, experienced a notable stock price increase of over 4.5% on Monday, reaching $121.70 by mid-afternoon. This surge was driven by Citigroup's decision to maintain its buy rating on AMD while raising the price target from $100 to $120 per share. The timing of this upgrade is significant as it precedes AMD's Advancing AI event, where CEO Lisa Su and other industry leaders are expected to outline AMD's strategic vision for artificial intelligence, AI, showcasing its comprehensive AI solutions and ecosystem. The event is anticipated to draw attention with major sponsors like Dell, Lenovo, and Oracle, indicating strong industry collaboration. Investor sentiment has been further boosted by AMD's recent strategic acquisitions aimed at enhancing its AI capabilities. The acquisition of Brium, specializing in AI software and compilers, and Enisemi, focused on co-packaged optics innovation, aligns with AMD's broader strategy to strengthen its AI platform. This comes on the heels of AMD reporting robust first-quarter earnings and providing an optimistic revenue forecast for the second quarter. As AMD continues to expand its AI footprint, the company's strategic moves and positive market reception could influence its stock performance and position within the information technology sector.
The Seafarers International Union, SU, has raised alarms regarding the expansion of a largely unregulated dark fleet of vessels registered under foreign flags of convenience, FOC. These FOC registries allow ships to operate with minimal regulatory oversight, enabling them to evade sanctions, safety protocols, and environmental regulations. This issue has prompted the Federal Maritime Commission, FMC, to launch an informal investigation into these practices. The SU, supported by analyses from Lloyd's List, claims that the dark fleet now includes between 600 to 1,000 vessels. The union is urging the FMC and international regulators to take coordinated action to address these systemic abuses, which distort competition and compromise maritime safety and labor standards. The U.S. Department of the Treasury's Office of Foreign Assets Control, OFAC, has updated its advisory to help the maritime industry identify vessels involved in sanction evasions, particularly concerning Iranian-origin petroleum. The advisory highlights how shadow fleet tankers exploit flag registries with lower due diligence standards, often using fraudulent or unauthorized flags. The International Transport Workers Federation, ITF, and SU argue that the FOC system, which has been criticized for circumventing labor regulations and enabling unsafe working conditions, gives shipowners unfair competitive advantages. These practices suppress wages, evade taxes, and create a race to the bottom in the maritime industry. The SU recommends that the FMC's investigation consider measures to ensure fair competition and safety standards in global shipping.